Are you looking to take your personal finances to the next level? Well, you're in the right place. Welcome to the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not, with your host, Joseph Sangle.
Well, welcome to episode number 60 of the Monday Money Tip Podcast. My name is Joe Sangle, and I love being able to bring these money tips to you every single Monday to kick off your week. And as always, I'm joined by my fine co-host, Megan Hibbard. Are you fired up today?
Fired up.
I am so fired up. We're back in the studio, recording the podcast.
Yep.
Fall is around the corner, maybe. It is. Maybe in the northern reaches of our podcast, fall might already be starting to show up on August 26th. But, you know, here in the South, it's still the ending, waning of our fifth season known as Inferno, which is between summer 1 and summer 2. Get fired up. And we're so excited because it is last Monday of the month.
I can't believe that.
And we all know what that means.
Yes. So the last Monday of the month, we are answering your questions. So we're going to do rapid fire, ideally.
Yes.
And so we're going to be answering lots of questions that you guys have sent in over the month and try to help you guys out.
Yeah, it's going to be great.
Yeah.
And we're going to talk about a variety of topics. I understand we're going to talk about stuff from like home mortgage stuff to debt reduction to investing. Hopefully we cover a lot of ground today. You know me, though. Sometimes, you know, I start talking. So just interrupt if it gets out of control.
Yes, we'll do.
And we know how much you just talk. Like, you just talk and talk and talk. No?
Well, you don't think so? Sometimes I do. Well, honestly, in here, it's hard to get a word in with you. So.
Yeah, that's right.
Yeah, but my husband might have a different opinion. He might
How
say
is
I
Jordan
talk
doing? Is he doing great?
He's doing good, yeah.
And your boy, Logan?
He's doing great.
Doing great. And
Growing like a weed.
your other little boy, Barkley, the dog?
Our furry. Yeah, he's sad.
Yeah, your fur puppy?
He's
and
sad.
I'm so excited.
I cannot
I got a fur
believe
baby
this
coming
day.
to my house, and she's about 7 weeks old. And so in a couple weeks, we have a little fur baby coming to our house, a little baby golden retriever.
Man,
And she may have a name. We don't know.
How did you convince your wife to do that?
I burned up 26 years of relational equity.
For the puppy.
Pray, saints. I need some help. It's going to be awesome.
If you
We're very
haven't
excited.
seen, you should look on his Instagram because that puppy is so cute.
It's so cute.
I need to come hold it whenever you guys
okay.
get it.
It'll be great.
Or her. Is it her?
It's a her.
Her.
And we get to visit her once a week right now.
Oh, is she? So she's close?
Mm-hmm.
Oh.
Yeah, across the street.
Oh, that is close.
For real. So it's really neat. But that brings us to that favorite moment, my favorite moment of the podcast. We know what that is. Let's go.
Now it's time to get caught up with our current money events.
This portion of the podcast is sponsored by I Was Broke, Now I'm Not. Take your finances to the next level by utilizing their free financial tools and calculators. Visit iwbnin.com, click on tools, and you'll see budgeting templates, debt freedom date calculators, retirement calculators, investment calculators. They're all right there at your fingertips, and they're all free. So make sure you go download some of those.
Yeah, that's right. And we got a bunch of new tools coming your way, too. We're going to add some.
Yeah.
It's going to be really exciting. For today's current money event section, I'm going to do a current event on something that we've not talked much about. And then I'm going to talk about like a current money event. But this is kind of a current money event that we're going to kind of break some news here. I have been writing a new book.
Mm-hmm, you have.
And it's the first brand new book since 2013. And I did a revision of I Was Broke, Now I'm Not, maybe in 2014-ish, around that time.
Yeah, 2014.
But this is the first brand new resource that we've been able to produce in book form in the last 6 years. And I'm really excited about it. And so I've been doing a lot of writing. And we're now, it's written, and now we're trying to make it good.
Yep.
And so that means ruthless editing and all that stuff. So for that current money event, I just wanted to share that with all of our podcast listeners. Be on the lookout for that. It is our aim to be able to release it in the middle of October. Fired up.
Woo. That's
awesome. Woo! And people wonder what that book is about. Well, maybe we'll tell you next week's episode. So you got to listen.
Yep.
Be good. But here's a newsflash. It's probably about money. That's pretty surprising, I'm sure. But anyhow, actually, it's a romance novel. False. No, it's not.
That would be something.
That would be awful. It'd be like 1 page long. You know, Sally met Harry. Harry fell in love. They were married for 79 years. They died within hours of each other. The end.
This podcast is really taking
That's
a
awesome.
turn.
Yeah. Anyhow, you didn't say for the better. I'm a little alarmed about that. But what I'm going to talk about today is about real estate. And this is really important because the Federal Reserve, who controls the world of money, they affect the world literally about money. And Alexander Hamilton and Thomas Jefferson had a say in that. If you ever watched the play Hamilton, they kind of talk about that. But they recently cut their key benchmark rate, the overnight federal funds rate, by 0.25%, or also known as 25 basis points. That's 0.25%. And that's kind of crazy because if you go back a year for earlier on this podcast, I was talking about how rates are going to go up if you're going to refinance. Well, I was wrong. And it is kind of crazy that they're lowering rates. But while it's good news for mortgage rates, which is how it relates to real estate, it's also bad news for savers. Because as the interest rate is lowered by the federal funds rate, by the Federal Reserve, it lowers what banks can earn on that money that we put on deposit with them. And as a result, they can pay us less interest. And so as I've shared in recent episodes, our favorite online banks like Marcus.com and Ally.com and Discover Bank and American Express Bank, they've all reduced their interest rates in a direct response to that federal rate cut.
Yeah, I've actually gotten 2 emails because I remember a few podcasts ago.
Yeah, you said you got one.
And then this past week, I got another email saying they were lowering
Same bank?
again. Yes.
Boo. What's it lowered to now?
It's like 1.9.
Yikes.
Yeah.
It's not good. So it's better than zero. And it's definitely better than your 0.01 to 0.04 from your big bank. Yep. So you should check them out still. Next Steps Banking. But to continue, there's a bigger issue in play right now, and that is the inflated cost of real estate. I don't know if you've noticed, but houses near you probably went up, probably a lot. You know, a greatly improved economy has driven real estate prices to record highs, and reduced interest rates actually support increased purchase prices of homes because most people don't really care how much a home costs. Did you know that?
Yeah.
They only care about one number. Guess what that is, Megan?
The house payment.
That's right. They ask the question, can I afford the payment? They don't care how much the house costs. They say, how much is the payment?
Well, most people have no intention of paying the house off.
That's right. They intend to, but the intention is very long term.
Yeah.
And it's when they win the lottery, things like that. But think about this. If a house sells for $225,000 and they put 5% down so they can get a conventional mortgage, that's $11,250 down. That mortgage is going to be for $213,750. At a 4% interest rate, the payment would be $1,020 per month. Okay? However, if interest rates are down 0.25%, the payment will actually drop by $30 from $1,020 to $990. So that 25 basis point drop is $30 a month. That matters. Mm-hmm. And at the new lower rate of 3.75, the purchaser could actually support a mortgage of $220,350, which is $6,600 more, and still have that same payment of $1,020 at the higher interest rate. And so as a result, it will drive up prices in your area. And so my words for those of you that are planning to purchase a home is pay attention a lot to the actual purchase price. I know you care about how much is the payment. However, this becomes very, very important, particularly in the face of rising interest rates, because rising interest rates will affect people's ability to get a mortgage. And guess what? The person who will buy that very home from you will probably not be doing so with cash. They will need to get a mortgage. And if the interest rates are up, they are still going to be asking that question. What's that question?
But how much is the payment?
How much is the payment? And that means they will be able to pay less for your house. It will drive house prices down. And while interest rates have went down recently, they will rise again as surely as Jesus will rise again. And so that's it for today's current money events section.
Awesome. Okay, for our success story today, we have a story from Nikki. And Nikki said, my biggest financial win was that I unexpectedly inherited a lot of money from my grandfather's estate. I'm excited and hopeful that it is a boost I needed to start some investing and saving. I paid off my debt except the mortgage.
That's awesome. And I actually reached out to Nikki to ask her permission to share the story. And first off, our condolences in losing your grandfather. It's always a tough moment to lose a grandparent or any loved one. And, you know, he lived. I just want to speak to the fact that he lived the scripture, Proverbs 13:22, that says a good person leaves an inheritance for their children's children, for their grandchildren. And that's Nikki is a living recipient of her grandfather leaving that inheritance of money.
Yeah.
And one thing that I know about people who are leaving an inheritance, if they had the option of how that money would be utilized, and option A is they go blow it, or the recipient uses it in a financially wise manner and it helps them advance in their life towards their plans, hopes, and dreams, every single living human being would choose option B. Mm-hmm. That's exactly what Nikki has done. That this great gift from her grandfather is allowing a legacy to be built into her life. She is now debt-free, except for her mortgage. She's been able to start investing. That is such a huge moment in any person's life. And as I say to anyone who's trying to get out of debt and start to make progress forward, to dig out of that hole and then move forward, is everybody needs a moment where they flip it. That something happens that is unique and extraordinary that allows them to flip it. For some people, it's the ability to buy a business, or they start a business that becomes very successful, or they buy a piece of real estate and for some reason it sells for way more than they expected. It could be a moment where they get an inheritance, or they get this really unexpected bonus from work. And when those moments happen, it literally pivots their life, that they look back at that moment and say, that moment right there changed my financial future. The whole trajectory of my life changed. And that's what happened for Nikki. And so we celebrate your advancement, Nikki, that you utilize this money in a way that honors your grandfather's legacy, and really is wonderful that you chose to share it with us, and we're sharing it with everybody listening to the podcast. This is the reason that it's important to me to leave an inheritance. But I promise you, I want to leave an inheritance in a way that advances those that would receive the money. And we pray for that. We can't control that, but it's a wonderful thing. Thanks, Nikki, for sharing that.
Yep.
Fired up.
And it probably allowed her to to advance up many rungs of a ladder.
That's right.
If you're able to, investing, saving, paid off debt except for the mortgage, she's able to.
She's at least on rung number 6 of the ladder, where she can invest at least 15% of her gross income into tax advantage investments. That is a wonderful place to be. She's well on her way to a fully funded life.
That's awesome. Congratulations for being able to pay off debt.
Yes.
It's great.
Phenomenal.
Yep. Okay, so just a reminder, today we're answering your top money questions.
Hit me with them.
We have a couple here, so are you ready?
I'm nervous. I see a bunch of them. I'm going to have to talk fast.
You are going to have to talk fast. I'm
All
going to
right.
have to time you, cut you off. All right, number 1. I have an annuity in place right now. My new financial advisor wants me to move it to a different investment. Should I do that?
Okay, so to help everyone understand what an annuity is it functions similar to a pension or Social Security benefits in that you purchase it for a certain amount of money, and the provider of the annuity guarantees that you will get a certain payment on a set frequency, monthly, annually, or some other agreed upon series of payments. And it will happen for a set term, or many of them are until the person buying it dies. And it's almost like an insurance product because you're guaranteed this money. And a lot of people buy annuities, even though they are very, 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 very expensive. They buy that because it is worth it to them to get the guarantee. And so if this person says, I have an annuity in place already, and the advisor wants to move it to a different investment, I would say you have already paid all the fees for the annuity. I would leave it there. If I woke up tomorrow in your shoes, I would leave that money in the annuity, and I would invest any new money I found into a separate type of investment. But I wouldn't want to pay the fees to get it in. Many times there's expensive fees to get it back out.
Yeah.
And so I'm not a fan of doing that.
Yeah.
Does that help?
Yeah, that's great. All right. Next question. I'm in my 70s. Is it too late to invest?
Absolutely not. If you're in your 70s, is it too late to invest? Well, I would say it's another question is, where are you at on the ladder? And if you're all the way up on rung number 6, you've got at least 3 months of money in savings, and you've got extra money every single month, then invest. The rules that I have for investing, they're Joe Sangle's rules of investing. They're not printed in the Bible. They're not, these are not hard and fast, but they're my general rules of investing, is if I don't think I need the money in the next 5 years. So think about 5 years. 5 years is a long time.
It's a long time.
So if you don't need it for 5 years, it's got to be invested because there is a guarantee that inflation is going to be eroding your dollar's ability to buy stuff, and a basic savings account won't be able to keep pace with inflation. And so you got to put it at risk. If you need it sometime in the next 5 years to replace a car, home maintenance project, something like that, put it in a high-yielding online bank for a savings account. But anything else, I would invest it. Now, it depends upon each person's willingness to take risk. I am not 70. I'm 25 years away from that. But I will tell you this. I don't think it'll change. I like taking risk with money, and I like investing it with the hopes of earning more income with it. My father is 81. He continues to do the same. And I'm similar to my father in many ways, especially in the entrepreneurial side. And so, no, it is not too late to invest if you don't need the money in the next 5 years and you're at least on rung number 6 of the ladder. Yep. Great question.
That's a good question.
By the way, I'm in my 20s. Is it too late to invest? No. Get started now. I'm in my 30s. Is it too late? Guess what the answer is?
Yeah.
No. What about 40?
No.
No. What if you're in your 50s or 60s? Or what if you're in your 700s? What if you're Methuselah, 900?
Yeah.
That'd be awesome. It's not too late to invest.
And you can flip it around. Hey, I'm in my 20s. It's not too early.
That's right. It's not too early. I like that. That's really good.
So even if you're in your 20s.
It's never too
compound
early
interest.
or late to invest. Investing is good activity because, as we say, when you invest, you can expect a harvest. You got to say it just right, Megan, so it rhymes. When you invest, you can expect a harvest. Get fired up.
All right, our next question. I don't think my parents have a will. Do you have any good ways to initiate a conversation about this scary topic with them?
Yes. Yes. We have some good ways. Number one is say, Mom, Dad, you're old. You're going to die. Do you have a will? Do you feel like that would be a good approach?
I don't think so.
Imagine having that conversation with your parents. Would that work well?
No. I mean, they probably would be, it would catch them off guard for sure. I mean, I'm sure they would answer the question, but like,
I remember
I don't think that's the way you want to do it.
I think it was some movie with Jim Carrey where he says, now don't you go dying on me now. I don't know if you remember this. It's terrible. Hit to an old person, and then she robbed him. It was awesome.
What movie is that?
I don't know. I'm probably ashamed that I ever watched it. But here's what I know is there are good ways to have this conversation. And one of the great ways to have the conversation is to speak about a public celebrity type person who's recently passed away who did not have a written will. There's always some famous person who had quite a lot of assets and money and didn't have a will.
Prince,
Aretha Franklin, and so you can say, hey, did you see that Prince passed away? Man, I saw that he did not have a will. Can you believe that? And talk about it for a second and say, you know what? It brought to mind, I've never had the conversation with you guys. Do you guys have a written will? That's a great way, and it's an easy onboarding to the conversation. Actually, I had this conversation with my parents and used that exact same technique. And what it really does is it allows you to help broach a subject that no one likes to talk about, which is death. None of us like to face the fact that we're mortal beings. In Italy, there's these amazing buildings and art and all this amazing stuff built by the Medici family. I mean, it's unbelievable. I mean, billions of dollars in today's money. They own the entire financial centers of Italy back then. They're all dead. They all died.
money couldn't help them.
Money could not help them. And so you got to have a written will. And one of the things that I think is important is to also talk about health issues. You can talk about a story. There's several stories that have happened where somebody was younger. They had a health event happen. Many times they go into a coma. They did not have a advanced directive for health care. And so there's no one who has the right to make healthcare decisions on this person's behalf, nor have they expressed their desires of how much they want to be resuscitated or kept artificially alive. And many people have been kept alive artificially for dozens of years while it's fought out in the courts about what should happen. Where if they had that simple document in place, it would allow that individual to express their desires on whether or not they want to be kept artificially alive, whether or not they wanted to donate organs, all that type of stuff, which is super important.
Yeah.
And so I encourage you to have the conversation with your family, talking about real life events that have happened and then say, it got me thinking, what do you guys have? And a lot of times that can become a very productive conversation. Yeah. And I do point you to LegalZoom.com, USLegalForms.com. You can get documents for all those things, the Advanced Healthcare Directive, the Durable Power of Attorney for healthcare, for your finances as well. And that will or that estate plan, you can get a basic one for about $159, $160 for a family, for a couple. And you can get, if you have assets of more than $500,000, a net worth of more than that, you should go to see an estate planning attorney and pay the $1,000 or so it'll cost you to get all that in order. It's worth the conversation and the weirdness to make sure there's clarity.
Yeah. And I will say our friend Stan Craig, so we've done some webinars with him, that kind of stuff, has written a book about that we have on our store. If you guys want to pick up a copy of that, we'll have a link to that in the show notes.
It's called Four Talk.
Four Talk.
So 7 critical conversations you should have.
Yep. And so it's great. It breaks it down into a lot more information than we obviously have time to do here. So, all right, our next question is, my bank is paying me virtually nothing on savings. Yep. Mm-hmm. I've heard you talk about online banks and their high interest rates. Are those banks safe places for my money?
Are they really safe places for your money? As safe as your local bank. They are FDIC insured. That the same level of FDIC insurance happens at your local bank happens with every one of these online banks.
Yep.
And the reason they can pay higher interest rates, because a lot of people say, how come they can do that, my local bank can't? Well, it's because the online banks are not paying for the bricks and mortar of the location, a staff there in that location. They've centralized their resources. And you know what? The only person that feels awkward about it is the one who just can't come to grips with the fact that so much stuff is done virtually these days.
Yeah.
But it's absolutely safe, FDIC insured. I've had my money with them for well over 10 years now, 12 years, 13 years. Since 2006. I think 2006 is when I started, or 2007 early. Never had a problem. In fact, the only places where I've had like a debit card fraud happen was with my big bank, has a local bricks and mortar location.
Yeah.
I've never had it happen with my savings account.
Yeah.
And so they are safe. They're FDIC insured. You have the same level of federal deposit insurance as you do for your local bank. So yes.
Yeah. And I will say, since they don't have the brick and mortar location, their customer service is, like, anytime I've dealt with them, has been stellar.
Premium.
And because they have to have something, obviously they have the higher rates, but they also have great customer service.
Who do you use?
We use Ally Bank.
Yep.
Love
so
them.
Megan uses Ally Bank.
Yep.
I use Marcus for my online bank, and both of them are fantastic.
Yep.
And so I just encourage you to check them out on our Next Steps banking area. And we're constantly doing evaluation of other banks that are out there. We try to link to the ones that have the highest interest rates on your basic savings, dollar minimum balance, no fees.
Yep.
We have time for one more question.
One more. All right. Can you give me some tips on saving money on my insurance policies, especially my home and auto?
Yes. Saving money on your insurance, especially on your home and auto. Yes, this is pretty straightforward. I actually talk about this in my book, I Was Broke, Now I'm Not. And here are the principles. Number one, bundle your insurance together. So get your home and auto insurance quotes together. If you're renting your place, get your renter's insurance bundled with your auto insurance. Number two, get quotes from at least 3 companies, 2 name brand ones and 1, independent company. You're in good hands with Allstate. Like a good neighbor, State Farm is there. 15 minutes or less could save you 15. Oh, you already knew that, right? And then an independent insurance agent. And here's the tip. Don't tell them what you're paying right now.
Right.
They will always want to get a copy of your policy and bill because they want to see what you're paying right now. And what I found is they won't give you this steep discount that you could get because they'll say, hey, I'll give them $25 a month. And they'll be all excited they saved $300. They could have gave you $40 a month. And so don't show what you're paying right now. And I would say the next tip is when you get the quotes, be ready to make a decision. A lot of people kind of wait until their homeowner's insurance policy expires for the previous year or whatever. You can get a credit back where they'll actually send you a check for an unused portion of the policy when you switch. So you don't have to wait like you do with medical insurance. Make the switch when you see the deal and just do that. I know that one of the big reasons people stay with some companies for long term is they're loyal, right? But are you more loyal to your insurance company or to the money, the hard-earned money you've earned?
The money.
Yes. It says on my money, in God we trust. That is true for me. And so I want to make sure that I'm the best steward of that dollar. And so I get quotes every 2 years. And you know what? I've stayed with the same company for about 4 years now because I'm checking them every year, but I'm getting a pretty good deal. And I think it's maybe because my insurance agent just knows the call is coming. Yeah. He knows what day of the year it's coming. But you can save a lot of money. Yeah. 15 minutes or less could save you 15% or more.
We're in the process right now.
There you go.
Shopping.
Maybe next episode or two, you'll give an update on what you saved.
Yeah.
Get fired up.
Be good.
Awesome.
All right. Our key financial quote for today. We've done this one before, but I think it's really good that I think it begs doing it again. So, he who asks a question is a fool for 5 minutes. He who does not ask a question remains a fool forever.
That's right.
It's a Chinese proverb.
It's a Chinese proverb, and it's so true. And so we include that as a financial quote for today, and we'll finish it with this way, is because that's why we want your questions, is because we know that many people have money questions, and they feel awkward about asking them. They don't know who to ask. This is a great, safe place for you to email your questions. Let us know what you have questions about, and at the end of every single month, that's what we devote the podcast episode to, is answering your question. So you might feel foolish for 5 minutes, but if you never ask, it might go on forever.
That's right.
Get fired up.
All right, so our next episode, I'm actually really surprised. We've never done this before.
Oh, I'm so excited about it.
It's very interesting. So, next episode, we are going to talk about the I Was Broke Now I'm Not ladder. So, we talked a lot in many episodes about various rungs of a ladder. And in next week's episode, we're going to walk through each of these rungs and help you identify the next financial step you need to take. Yep. So, make sure you tune in there. And if you like today's episode, help us get this podcast to others who could benefit. You could do this by quickly rating our podcast and leaving a review. These ratings and review help us make our podcast better for other listeners. And don't forget the last Monday of the month, just like today, we're going to be answering your top money questions. So send those in just like we talked about. You can email them to us at info@iwbnin.com. You can send them on Twitter, Facebook, Instagram, whatever works better for you. And then if you implement one of our tools, our tips or tricks or hacks or whatever, make sure you share your success story with us, and you can email that to us as well.
That's awesome, and I'm so excited about the next episode of The Ladder. As I part today, I want to share a deep thought with you.
Ooh.
Here's a deep thought. As kids, we have no problems believing. As adults, we have no problem disbelieving. Be like a kid today. Go out and believe that you can accomplish the big dream that's in your heart. Have a great week. We'll see you next week for next episode of the Monday Money Tip. Get fired up.
Thanks so much for listening to this episode of the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not. If you enjoyed today's episode, please leave a review and subscribe. And for more great content and to stay up to date, visit iwbnin.com. We'll catch you next time.